guys, welcome back to another week of Mortgage Matters in Minutes. Again, I'm your host, Brent Rasmussen, owner of Mortgage Specialists. Hope at this point in time, if you're following along with us weekly on our Facebook Live or Instagram Live, we are hitting the middle of summer, and that is the time where people, many times, the most activity of housing here in the Omaha metropolitan area. Activity happens because people are moving around generally around schools and weather is better and they might be moving across the country or back to Omaha. But today we're going to talk about what the banks don't want you to know. And this isn't supposed to be a negative thing. It's supposed to be an educational piece. We don't have anything against the banks, but sometimes people have these notions that banks do things or banks are the only ones you can go to get mortgage loans. And the consumer just assumes that because they have their checking, their savings account there, and they would get their car loan there, and they go in there, get their whatever kind of financing they need, and assuming that is the best option for them. And it doesn't necessarily mean that to be true. So we're going to talk about a few different misconceptions that people have when it comes to mortgage lending in regards to banks, mortgage companies, credit unions, independent mortgage bankers, all the above. And I teach many federally licensed courses. I teach many continuing education, and I explain this to all my consumers. In my opinion, it doesn't really matter exactly what particular entity you go to in regards to bank, credit union, independent, you name it, as long as you're going to a company that has smart, educated, experienced people and has a good process put in place. So one of the first misnomers that people think by going to their bank is that they think that only the bank has only their options. And in essence, banks offer the exact same loans that every other company offers because most of the loans that are done are federal loans through Fannie Mae, Freddie Mac, FHA, VA, USDA. There's not many mortgage loans that are independently created that only one institution would be able to offer. For example, even NIFA, the Nebraska Investment and Finance Authority, some people can offer that if they choose to sign up with NIFA, but it's not only banks that have access to that type of loan. But first-time homebuyers as well have the same access to all the loans, whether they go to different people in regards to that. So sometimes an institution will say, well, if you come to us, you already bank with us, we'll give you a better interest rate. Well, generally speaking, that isn't always accurate as well. Your bank is not going to do something generally different than what other lenders can do because it's not their own money that they're offering. They're actually using someone else's money and they're putting that loan through the system of Fannie Mae, Freddie Mac. So offering an enormous discount because you bank with them generally isn't always something that occurs. Bank offers, sometimes banks from institutions, credit unions, or independents will offer special deals. And I can say us as a mortgage broker, we work with hundreds of mortgage lenders through the years. And sometimes when lenders get slow, they'll throw out a special, or when they get too busy, they won't offer a special. So generally speaking, the whole industry is going to offer special offers at certain times, depending on how busy or how slow some of the things are going on. All mortgage companies are going to base the loan off of your income, your debt to income ratio, your credit score, and your loan size. They're all going to do those the same because if they did it differently, they really look at regulation of discriminatory practices, and they don't want institutions to obviously give two people that have the exact same scenario with credit, income, assets to get two different interest rates. That would look discriminatory because why does one person get something of this and one person should get something different of that? And they really look at that when it comes to audits and what kind of loan volume and how many loans are going through the system to make sure that doesn't happen as well. All lenders offer a pre-approval or a pre-qualification. We all do the same process in regards to that. And the steps that need to obtain are different. Some institutions won't ask for a lot of paperwork. Here at Mortgage Specialists, we don't offer a pre-approval unless we have validated everything that we need to validate. It's not that we don't trust borrowers or buyers. It's just we've been through lots of things and individuals don't necessarily know all the mortgage rules. And that's our job, is to make sure that the rules are met. So when you need that loan a week or two before closing, it's actually there. I see lots of institutions, people go elsewhere and online, and they didn't validate how you received your income, whether it was commission or whether it was a salary. And that makes an enormous difference in regards to qualifying for the loan itself when push comes to shove. Mortgage insurance is another one. All lenders have access to the same mortgage insurance companies. So mortgage insurance is private. So it's private companies that post their insurance rates that are out there. So many times your lenders can negotiate a mortgage insurance agreement. But if we look at consistencies across the board, overall, 80%, 90% of all lenders are going to offer the exact same mortgage insurance rate. And the last kind of misnomer I think individuals have is, well, I bank with that company or I work at that particular lender or that credit union. They have all my information. So it should be an easier process either to refinance or start a new loan. And I will tell you, because of all the mandated federal rules that exist, every time you start a new loan, a brand new application has to happen, all new documentation has to occur, unless possibly we have a copy of your W 2 from last year or your driver's license that has not happened to be renewed for another year or two or three. We can grab a few pieces of those, but generality, we're still going to have to ask for all the exact new paperwork, like updated pay stubs and updated bank statements as needed, things like that. We here at Mortgage Specialists are what's called a mortgage broker. We also are a mortgage lender. It's hard for people to understand all the different dynamics that we have, but what I can share with you in my experience over 25 plus years of lending is that working as a mortgage broker, we've worked and put loans through hundreds and hundreds of different lenders. We know their different processes. We know their different rules. We know why this happens. We know why that happens. Many a times, if you go to one institution and they know one process, they don't understand the entire environment. And that's where we can step in to help educate individuals on why something happens. And we can also shop the market and possibly move the loan to where we see the best rates and closing costs happen. So that what makes us different. Obviously, we feel strongly about our experience, our responsiveness, our education, and that's really who we are at Mortgage Specialists and who we want to work with other clients is information that you need to have access to that we can help answer those questions at a sit down appointment on a Zoom meeting or on a phone call. So again, we are here just a phone call away at 402-991-5153. You can check us out on our website, drop us an email, connect with us on social, like, comment, and subscribe below. And we'll see you all here next week for another Mortgage Matters in Minutes. Mortgage Specialists. Driven, trusted, reliable.